What's going on, guys? Thomas McIntosh with Macintosh Trading, and today I'm bringing you guys another video. Today we're going to be talking about what to first look at once you open up a ticker and how to decide if you should just let that one go or if you should actually trade it. So let's get into it. Alrighty, so first up here we're just going to talk about ADR. This has been a pretty spectacular ticker the last couple of weeks, and so we're just going to talk about this one. And it ran a little bit today and then it sold off most of its gains, but I just want to show you guys kind of what I would look for if I first pulled this up and how I would decide if I was going to indeed trade this one. So first up, I always look at the daily first just to see where it's at, and if I see tickers that are just trading down here, I usually won't trade them. This is kind of a strategy that some people will use. It's called like bottom feeding or bottom fishing, just kind of looking for cheap tickers that have been basing down here for a while. And I just tend to avoid these because they could literally sit down here for months and months and months and never do anything, or they could eventually pop. And if they do eventually pop, then that's when I'll look to play momentum off of them. But if they're just going to continue to sit at the bottom, there's really no reason for you to trade them, so you might as well just leave those be and trade something that actually has already momentum built up. That's just how I personally look for a ticker, but obviously everyone's different, so it's just going to depend on kind of what you're looking for. Now today, this one did pop pretty well. Let me refresh it here. It had a nice pop in the morning, and then it had a nice wedge set up here that finally broke out around here, and then it ended up breaking out to 1350 before selling off its gains. Now, something to note when looking at a ticker like this one, say you go back and you look and you see that this ran from $3 to $20, $19, I guess. Now, everyone remembered this run. I'm sure you remembered it if you're watching this video, because we all kind of played it a little bit. We might have played it wrong, but either way, this was like a nice little squeeze play from $3 to 19. And something to note is when something gets squeezed like that, like it gets squeezed more than what it really should have been, which this stock never should have gone to 19, and it probably still shouldn't even be trading at 11 to 12. It should be more, I would say, in the $5 to $8 range maybe. Anyways, when those stocks get squeezed like that way too much, it just makes them much harder to trade, and they need like a way bigger push. Like this stock could have absolutely great news, but it would just continue to not trade very well. To give another example, I'll go to SPRT. This stock had a massive squeeze to 59, and it started at like $3. Ever since that run, it's just been completely hard for this to hold gains, and now it's even selling off worse. So like it had small pops here and there, like a pop here, but none of this is something that you could like swing overnight or like make money just like sitting in the stock for that long. You'd have to be able to scalp it. And I'll show you another one. If we go to MRI in here, you guys can see here it had a massive squeeze, and then every little run after that has just been short-lived, and then it just continues to sell off all of its gains, sell off, and now it's even fading even more. And then another one to look at is NURO, which had a massive squeeze that didn't deserve to happen, and then every run since then has been pop, dump, pop, dump, pop, dump, pop, dump, and it just makes those stocks harder to hold their gains. So you're going to see this play out in ADR too, because it had this massive squeeze. Yeah, it had a pop here, but the next day, tomorrow, I'm assuming this will be in the mid to low 10s potentially, and then even drop lower. So it'll just kind of depend on tomorrow's price action and see if anyone pumps it online. But even if people do pump it online, it's just going to have a harder time running. And you see the same thing with BBIG. Will Mead got it pumping from $2 all the way to 12, and then every time it's tried to run again since, it's just been shot down. Today it even had a pop, but then it was just instantly sold off. And this is probably just going to end up continuing to fade. Even though it does have a merger coming up, it's probably going to dump after that merger, even if the merger goes through. So that's just something to keep in mind when looking for a ticker. I know that one can be a little tricky, but you should always know what you're dealing with. So make sure you go back and look at those previous runs. We can go back and look at TLRY. The same thing here. If you just refresh this, you can see it had a massive squeeze to 67 for no reason besides Wall Street Bets getting on it. And then ever since then, it just has never held gains. And now it's even trading at 52-week lows. So like these stocks, they might present opportunities, but more often than not, they're just going to trade terrible. And it's because there's so many bag holders up here, and then every little pop just gets shorted from there on out. And there's not enough buying pressure to continue pushing it higher. And for that reason, it just trades garbage. So that is something I would avoid. And next up, I would like to talk about how to look into like day trading a ticker first thing in the morning. So the first thing I usually look for is strength in pre-market. Now this one, ZIVO, had a nice pop to 837 in pre-market, and then it sold off most of its gains, and then it came right back into the normal market hours, and right away in the morning it had a nice pop to $7. And then this one was a little tricky, and another thing you need to look at is the float. The lower the float, the more volatile it's going to be. So although this did dump to 556, it came right back up. And then although it did pump up here to 770, it came all the way back down to 650 and then continued to rise. So these lower floats, they're going to be volatile like that. You have to deal with it. You have to buy the dips. You have to be confident if you're going to trade those types of tickers. If you're not, then obviously you shouldn't be worried about that, because like you shouldn't be worried about a 10% drop in minutes or seconds on a higher float, because it's just not going to happen. But with these stocks, it's very possible, and they can be really scary to trade, but they can also make a lot of money. Now, the reason I looked at this one was because if you pay attention to the opening volume, it had 14 million, 7 million, 5 million, 6 million, 4 million. It just had millions of volume, but the float right here is only 6.21 million, which would lead me to believe that this one has a lot of potential to squeeze more, and I think it would have if the market wasn't just complete garbage today, and if people weren't out just shorting every little play that tried to make a run today. As you can see, it tested this breakout zone 1, 2, 3, 4, 5 times, and then it finally just broke down. And usually if a play tests this breakout zone this many times and doesn't break out, that usually means that it's going to break down. So this one clearly broke down, and then it retested that breakdown zone and then just continued to fade. So this one ended up not working out today, but this one was obviously a good scalp in the morning if you got it and could handle the volatility and ride it up to here and then sell. But this is normally a setup that would work and end up playing out, but it just kind of depends. Obviously, this one didn't have any news, which I've honestly noticed has been like the top plays to play is the ones with no news. They just seem to get squeezed the most, or like something with relative strength that just doesn't seem to have news that would make sense. But if it has relative strength and volume, like that's just how you know the ticker like might move well. Like you can have your own opinion on the news or own opinion on the stock itself, but the market is going to overall be the one that decides whether that runs or not. So that's what you should be basing it on, is the relative strength and the momentum, the volume, because your opinion on the stock really doesn't matter. It's going to do what it's going to do based on what the market tells you it's going to do. Next up, we have EDSA, and this is one that I actually didn't trade today because I was gone for most of the afternoon, but this is just going to be the last one we talk about. It had a nice pop in pre-market off of some data. And something that I mentioned in the last video from yesterday was noticing market themes. And if you notice, the theme lately has kind of been bios. Bios have just been really hot, and bios with news specifically have been running more than like what they really should. So this one had a nice pop off of bio news. It had phase 2 data or something like that, and it had a nice pop. This ticker EDSA, you'll learn tickers over time. This ticker has just been known to pump and dump, so it gapped here, it went hard, gapped here, and it always sells off its gains, sold off, sold off, sold off, sold off, sold off. So this one you really can't trust. I mean, you really can't trust to hold its gains, but it did present a nice opportunity. It ended up breaking out. And just something to note again here is just the volume. It had a 3 million volume candle out of nowhere, and the float over here is sitting at 9.43 million. So that would give you an idea that this is likely going to continue higher. And then it ended up continuing to get heavy volume, 5 million here, 4 million, 3 million, 3 million per 5-minute candle, which is pretty good. So just using these indicators, just simply the volume, taking out all the other indicators, VWAP, Supertrend, ADMA, whatever, just simply using the volume, you can kind of decide if a ticker is ready to run and if that ticker is worth your time. I tend to stay away from stocks that just have no volume. Like I've had some people ask me, they'll just ask me about random tickers. Like say they asked me to look at TYHT, automatically I would just say no, don't trade it because this has just absolutely no volume. Um, they don't even make full candlesticks. Like this isn't even a full day's worth of volume because this stock will go 5 to 10 minutes without having any volume. So that just doesn't make it worth your time to play because there's no point in trading something that doesn't have liquidity. You're gonna get fills that don't get filled, or you're just not gonna fill anything. So it's just gonna be a pain for you to trade. So you might as well just stick to the ones that have volume and stick to the ones that are working. That's all I have for you guys. I hope you did enjoy this video. If you did, make sure to like, subscribe, retweet it on Twitter, just get it out there. And this is day 2 of this week where I said I would try to make a new YouTube video every day. So if you guys would like to see something new, please leave video ideas in the comment section below. Or you can just message me on Twitter or post it on my Twitter and I will see it. So yeah, see you guys later.